So the dollar just hit a 4-month low, while silver is behaving like it's had 3 espressos and no supervision. And tech stocks, well, they are staring down the Fed and earnings season at the same time. So if markets were a group chat right now, someone would definitely be typing, "Guys, are we okay?" So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. As always, we'll break down what's moving markets, what's driving sentiment, and where the pressure points are forming. Kicking things off with fundamentals, technicals next, and just enough humor to keep the caffeine as optional. Let's start off with currencies. Euro USD is riding one very clear theme this morning: broad US dollar weakness. The dollar index has slid towards 97, its weakest level in 4 months, pressured by a combination of factors. Growing fears of joint US-Japan currency intervention, after reports that the New York Fed checked USD JPY rates with dealers. Heightened geopolitical and trade uncertainty, particularly around Greenland, and renewed tariffs towards threats towards Canada, and rising expectations that the US president may soon replace the Fed chair with a more dovish candidate, keeping rate cut expectations alive. On the euro side, the story is more mixed. PMI data across the eurozone showed, well, Germany surprised to the upside, France slipping back into contraction, and overall growth continuing but at a slower pace. In short, the euro isn't flying, but the dollar is stumbling, and that's been enough. Looking at the charts, Euro USD has broken above the 1.185 area, reaching its highest level in months. The pair is trading above key moving averages, signaling improved momentum. On the daily time frame, the stochastic remains comfortably above the midline, confirming bullish pressure, and immediate resistance sits near that 1.19, with 1.18 now acting as a key support zone. On the downside, 1.174 is the first level traders should be watching for a larger pullback. So the structure tells us this move isn't random. It's been built on sustained dollar selling rather than a single headline spike. Moving over to commodities. If silver had a personality, it would currently be described as confident and not asking for permission. Silver surged more than 4% this morning, extending a historic rally to fresh all-time highs above $109 an ounce, driven by a powerful mix of safe haven demand amid geopolitical and trade risk, expectations of more dovish Fed leadership ahead, and tightness in the fiscal silver market. Retail demand has surged in China and India with strong interest in investment bars. In fact, some manufacturers have reportedly shifted production away from jewelry and towards investment products to meet demand. Add to that ongoing tariff threats, and silver has become one of the market's preferred expressions of uncertainty. Looking at the charts, silver is decidedly bullish, but stretched. Price remains firmly above rising short and long-term moving averages. Momentum is strong, but the stochastics is hovering above 80, signaling overbought conditions. The psychological 110 level is now the obvious zone the market is watching. Support zones sit much lower, starting at around $105 an ounce, followed by $102 and then $96, should volatility force a reset. In other words, the trend is intact, but the market is running hot, and hot markets tend to breathe, even in strong trends. Turning our focus to US tech, the Nasdaq 100 is entering one of the most pivotal weeks of the quarter. Markets are balancing a Federal Reserve meeting expected to hold rates steady and a wave of earnings from mega cap tech names including Apple, Microsoft, Meta, Tesla, IBM. Last week's volatility was driven largely by geopolitical headlines, particularly around Greenland and tariff threats. And while some of that pressure has eased, uncertainty remains elevated. Add to that growing speculation around Fed leadership, and you have a market that's cautious, reactive, and highly sensitive to forward guidance. Looking at the chart, the Nasdaq 100 remains range-bound. Price is holding above recent support, but momentum has flatlined. Short-term direction is likely to be dictated by earnings or reactions or Fed communication rather than technical levels alone. Any sharp moves this week are more likely to be event-driven rather than trend-driven. However, key levels to watch are as follows. On the upside, resistance is sitting around 25,550, followed by 25,850. And then on the downside, support is currently at 25,150, followed by 24,700. This is one of those moments where charts matter, but the calendar matters more. So traders, here's the question as we head into the final week of January. Will dollar weakness continue if Fed guidance stays dovish? Or does earning volatility steal the spotlight? And can silver keep sprinting? Or does gravity finally tap it on the shoulder? Well, we'll start getting answers very, very soon. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to atfx.com and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.